A very warm welcome to all the viewers of Ticker Market. Our topic for today is Outlook of 2019. We'll try to understand and crack what are the concerns that can derail the big expectations of FY19. And for this, we have Mr. Alok Singh of BOI AXA Mutual Fund. Sir, thank you for joining on Ticker Market. So if you're talking about Outlook of 2019, what do you think is the correct answer for investors? Should they wait?
When you talk of investing, there's something which is called cost of money, right? So by saying that, okay, I'm waiting for a target to be achieved, and so for example, I'll wait for monsoon and then I look at it, or anything for that matter. You have to appreciate that the money which is idle for that period of time, what is that you are going to do? Because ultimately the wealth creation has compounding as a very big impact, right? So if you are postponing anything, or if you are out of the market or out of investment, your idle cash is there, you're disrupting that compounding.
Sure.
So in that case, if I say, if you are a real long-term investors, a saver, then 3 months, 6 months of volatility, 10% higher, lower does not matter. So if you have money, if it is long term, I'll say that even today is a right time to do that. You will not make money unless the investment which you have done goes multiplier.
Sure. So we are talking about investment in FY19, and we are talking about first we'll talk about the concern as well as macro and the micro front. Larger concerns from global market as well. You're talking about geopolitical tension and already concerns from the trade tariff war, which is seen as a larger concerns for emerging markets as well.
Right.
What do you think, so the road ahead, the actual thing that can take the market to the next level?
Ultimately, the thing which will take market to the next level is the global growth, which India will also be part of it. So if you look at for last 5 years before, when the growth was not there, the stock markets did nothing for wherever we talk of.
True.
For last 1 year, we have seen growth coming back at the global level, and we have seen these kind of things. Yes, then along with that comes the induced volatility, which is coming from various things. Now, those things keep on changing. If you look at, if I go back sometime, it was Greece, then it was the geopolitical thing, and Brexit was there. Then your Trump and Korea was there.
Rate hike concerns.
Those things were there. Now it is the tariff war amongst. So those things keep on changing. Each of it will have some impact, higher or lower, depend upon the materiality of it. And you will continue to find those things. But as long as the underlying growth is there.
Perfect. As you correctly said that we're talking about macros, how concerned are you with the macro situation of India?
We have to appreciate that India is not a disjoint economy, right? We have traded that idea in 2007-8, post 2007-8, and we see what we so
the impact was less.
Yeah, but ultimately you're part of the same ship.
Exactly.
Right? You may not be in the front, but you're at the back. So I see global growth sustaining.
Right.
As a result of that, the Indian growth being there.
Right.
Right. Yes, there are some micro factors, which is like monsoon, which could have impact, policy slowdown because of the elections being there. Right. I think these are the things which are a bit of a concern. Food inflation in the country has been quite low for last 2 years.
Yeah, they've quietly managed it.
Yes. So if there is a drought or a lower monsoon, there will be a food inflation which will come back.
True.
And which in a way will have a positive impact on the rural economy, because if you look at last year, most of the disruption was because the farmer was not getting the right produce. So if you look at the positive side of it, the fiscal deficit to that extent will be lower because government does the MSP anyways will achieve.
True.
Right. So there's a positive side of it, and there is a large portion of Indian economy which is moving away from monsoon.
If we talk about the traditional micro factors, I mean, you see there is a pickup in commercial vehicles. We see pickup in the passenger vehicles as well. What is the clear indication, as we have already seen the December quarter was a pickup in earnings. Macro versus micro, these are the positives, and we have already spoken about the negatives. What do you think? So, downside is protected because of these factors?
In the present micro environment, if you look at the incremental news has been positive, right? Whether if you look at the fiscal deficit, people were disappointed, but then the calendar was quite encouraging. Then if you look at GST is getting stabilized, so one step by step, each of the concerns are getting addressed automatically.
So investors need not have to worry about.
No, there will be. See, if what I'm trying to say is that volatility is a nature of market, right? You cannot have volatility and have a vibrant market. So you have to live through it. It gets smoothened. So you need not be concerned about the volatility as long the underlying macro looks positive. The asset class will deliver as per its inherent value.
True. So as we are talking about investors and creation of wealth for investors, there is one argument which I would like to put forward to you is mid cap and small cap are still trading way above the 10-year moving average of the book value.
Yes.
So if we compare it with the large cap stock, they are just 5% premium to the 10-year historical book value. So is there argument of investment in large cap and you move out of the small and mid cap? What's your suggestion?
So if you look at those on a very generalized basis, these things looks quite alarming. But just to give you a perspective, okay, for the December quarter, if I look at the Nifty earnings growth quarter on quarter, it is average at 13.8%. This is the Nifty earnings growth. If I remove 4 stocks, 2 of the banks and 2 of the pharma companies, it moves to 25%, right? So that's the diverse. And if I talk of, say, for example, our say manufacturing and infra, okay, which is predominantly a mid cap and small cap in this, it's a sectoral fund. There, the earning growth has been over 50%.
Fantastic,
right? So if you look at, yes, they are expensive. People are chasing, but then the growth is also there. And that's the primary reason for it.
So what's your advice? Mid cap, small cap, or the large cap going forward in FY19?
I think mid cap and small cap will still do better in 2019 than the large.
Will continue to do better.
Yes, because if you look at large caps, the base is very high. So the incremental growth, need a larger push. Whereas for smaller companies, niche segment, they can grow much faster, and the earnings re-rating can happen much better.
As we are talking about investment and investment opportunities going forward, and you have already spoken about mid cap and small cap versus the large cap argument, I would like you to focus on the sector specific. I'm talking about the infra sector. And what opportunities do you see going forward for investments? I mean, in the recent numbers that were revealed by NHAI, they have awarded roughly around 7,500 kilometers worth of road contract to these individuals, and we have already seen a pickup in cement sales as well. So what's the outlook for the sector in consolidated infra sector?
So if you look at in the infra, there are 2 set of people. One are the materials guys, which are the cement and all those guys, and there are the EPC guys. Right. So obviously the cement and materials and all those are getting impacted because of all other things, because not all of their capacity is getting consumed by this particular sector. But if I talk of the EPC guys, right, those are actually having a dream run, so to say, because these kind of clean projects, because what has happened, NHAI has been done away with all those BOT and all those. So now it is pure EPC or HAM. Both of them are clean things. So if you look at with that kind of order book, this is the only sector which will have the highest visibility of our earnings being there.
So you are recommending investors to be in? I mean,
yes, because that with the earnings visibility and just to execute. So for example, I give you a very decent example. If you look at when in 2004, okay, when UPA 1 took power, that time NHAI was building roughly around 18-19. Because of the BOT bottlenecks and all that, the things came down, and obviously there was slowdown. Today we are building much higher than that, right?
Which is 2 times more than what
we used to build, and now there is no BOT overhang and all that. So you will have that visibility there. So which means even if the political volatility happens, these guys will still have lot of orders to be executed.
Sure. Moving on, if you're talking about the outperformers of FY18, and you're talking about real estate sector was a big surprise.
Yes,
I mean, the shift from the unorganized to the organized theme, which has really played well. Do you think so? This similar kind of returns is expected in FY19 as well?
I don't think so, because that big move of, as you said, between the organized and the expected move of organized versus unorganized, that move has been already discounted by the market. Whether it has happened or not, we have to still see, because
but you will stay away from
basically what I'm saying, the market has discounted that. That will ultimately happen, because ultimately if you look at the new home sales and the project launches, maybe low, the new home sales are not very high.
Perfect. We'll talk about bank and retail. I mean, we have seen these stocks literally melt from the top, and obviously because of the larger concerns. First of all, NPA concerns were already there, and then this LOU concerns have already come. Government and RBI both are having a tough time in making this sector lively for investors, or for those individuals who are really invested from long time in this sector. What's your take about this sector? Should investment be one in the private sector or the other PSU sector as well, who have taken a beating in recent times?
So obviously this is a large weight in our index, okay, and the market capitalization also, financials is a large weight. Obviously there are reasons for this fall which you mentioned. None of that fall is has, or rather reason for that fall has not corrected so far, right? And it will take some more time to get corrected. Till such time, we as a portfolio manager have stayed away from the corporate lender. So we have 0 corporate lenders in our books. We are more concentrated on the retail and all. I think that will continue to go do better. They may not do as good as what they did last year, because last year they were also having the the margins expansion because of the cost coming down, borrowing cost coming down, which may stabilize this year and may remain flat. So you may not have margin expansion, but then there is a huge growth which is there.
Sure, we'll talk the argument. I mean, PSU versus the private sector banks. Versus the NBFCs.
Yes.
What's your suggestion?
Okay. So I break it in other way. I say it is, instead of the PSU private, I said this type of the balance sheet. If the balance sheet is more corporate heavy, okay, for anybody, whether it is private or PSU, they are all having NPA problems, right? And they will have write-offs.
So opportunity for investors?
So I think not yet.
Not yet.
Not yet. I think there is some
So wait and watch.
Yes, I think there's some more time to for that.
So any other sector you think will outshine in FY19, as we have already highlighted about infrastructure? You have advised investors to stay away from the real estate. Banking, a bit, maybe 2 or 3 months down the line you will come to know about it. That's what the suggestion is. Is there any other sector you think that will outshine in FY19?
So if you look at the consumer durables, I think has been doing quite well, and it will continue to do better because there are 2 things which is happening. That India is getting electricity everywhere, so your usability of those things is increasing. So earlier many places people never used to buy because there is no electricity. Now with electricity being reaching, so that is there. And second is that in the urban area, the they're moving up the value chain. Now
Right.
you don't buy plain LED, you want smart LED. You know that value add is happening. The value add has led to the margins expansion. So I
True.
think that will continue. That's been theme which has been there for last 2 years. I think that still have a lot of
Sure.
legs.
So apart from this FMCG, is there any other sector you would?
So FMCG, I am not very bullish because FMCG has reached.
All right.
You know, you get Colgate even in the remotest place, right? But you may not get AC in the village because there is not that people cannot afford it. You know, there are many people who can afford it, but the electricity is not there.
Sure. So one last question, which I think I should definitely ask an AMC player like you is: do you see an increased participation in the mutual fund space from the investors,
Yes, I think because see,
despite of the from the budget announcements of LTCG?
no,
and
I
the
think these are the small things which keep on happening, and I think if you look at that was announced some 2 months back. For the last 2 months, we have not seen much disruption. There has been disruption, but not much disruption. I think savers have started understanding that how simple the products are and how the ease of investing.
Of course, the most experienced fund managers are here to manage the funds as well.
Yeah, that is there, and also see it has to be a combination of two, your expertise
Right.
and the accessibility of the thing. So this is the most simple, most liquid. If you look at any other investment option, this is, you know, you get money at T+3 in
Exactly.
in equity and T+1 in liquid funds, or so rather any fixed income
Any
fund
fixed income
for that matter.
Sure.
So there's nothing which is more that transparent. In the evening, you know what has happened to the fund. You can redeem at any point in time. You know, the cost structures are much lower. So
Sure.
I think people are realizing, and India as a society is a society which lives on confirmatory biases. Even if I am more confident, I want my friend to, you know, say that, okay, no, you're doing a right job.
Definitely, we are doing a right job, and you as a mutual fund player is definitely doing a right job. So this is the word coming in from Mr. Alok Singh of BOI AXA mutual fund, that stay invested. Infrastructure is a theme which is going to be really robust from here on, and stay away from real estate and banking. Maybe it will take 2 to 3 months more. Thank you so much for watching Ticker News.